Yo, what's goody, Latrell in a hoodie, and welcome to another episode of the Brother Next Door podcast, where we talk about finance, personal development, and skills to get you further in life through actionable steps and my own personal experiences. And in this episode, we're talking about the top three things to look for before getting into a loan. No, I'm not a financial advisor, but this is going to be a two-parter. First, we're going to talk about in this episode before getting the loan, right? And then we're going to talk about after getting the loan and getting out of debt. But let's focus on before in this episode. That way I can get these episodes down to a digestible length, and let's get right into it. So first, before we even talk about what to look for, we need to understand what different loan types are, right? There are several different types of loans. There are de- several different flavors, all those different things. So let's just get into okay, what are all these different types? So the first type I want to talk about is secured versus unsecured. Understand a secured loan is something that has collateral attached to it. So understand that could be your money, that could be a car, that could be a house, anything along those lines where if you don't pay or somebody doesn't pay, then there's collateral attached to it. Then there's something that the lender can go and say, okay, this is mine now. No matter if that collateral is worth the value of the loan or not. If you sign that agreement, you sign that contract, then you're saying, if I don't pay this money back, you could have my car, you could have my house, you can have this money that I gave you, right? Money that I gave you. What do I mean by that? Think about secured credit cards, right? So understand with secured credit cards, how those work is if you're not eligible for a unsecured card, but regular credit card, then what you can do is get a secured card where you say, hey, bank, here's $500. And then the bank will say, okay, cool, here's $500 credit limit. And so throughout time, you're building your credit, you're limited to up to $500 per month, right, that you can spend. And so as soon as you hit that $500 mark, it's like, okay, now you need to pay this off before you can start using this line of credit again. And that goes into another category that we're going to get into later. But that's how secured credit cards work. And so if they say, hey, and so if you don't pay that $500 off for whatever reason, they're like, cool, we we already got your $500, right? The $500 you gave us to begin with, run off with it, whatever, because they already have that money up front. So secured versus unsecured. Another type of credit is revolving versus installment. So with revolving, it's like a credit card. As soon as you pay it off, you can use that balance once again, whether it's $500, $5,000, $50,000. Just depends on where you're at in your journey. You have, they'll give you a certain limit, credit card wise. That's your limit that you can use for the month. You can stay below that. You can only use 1%. You can use 0.5%. It's up to you, right? But as soon as you hit that limit, you can no longer use that credit card anymore until it is paid off, right? And so that's how that works. Installment. So these are lines of credit where you get a large lump sum of money up front, and then you're paying off a consistent amount throughout, a year, 10 years, 20 years, whatever. Think of car loans or mortgages. You're getting the house, you're getting the car, and now you need to pay all that money back to the bank, right? And so that is an installment loan, right? And so different types. And so I just talked about the categories of loans. So these are the different types, just basically reviewing at this point. Credit cards, right? Mortgages, student loans, auto loans, and personal loans. So all of these are pretty self-explanatory, but understand mortgages has to do with your house. It's the most common and usually the most largest among Americans as far as loans go. Student loans. Understand with student loans, you cannot discharge those in bankruptcy. Bankruptcy. So what that means is if you take out a federal loan, you stuck with that. Like you were stuck with that loan no matter what you try to do. Next, auto loans has to do with the car, right? And then personal loans. So personal loans, say you want to do something with your house, you want to upgrade your house, you could take out a personal loan to fix up your kitchen or do whatever with that. Say you want to buy some jet skis, buy a boat, buy something else that's a big expense. Honeymoons, different things. Like think of things like that. Those would fall under the personal loan category. Understand when it comes to revolving versus or understand when it comes to secured versus unsecured. Secured are going to have lower interest rate. Why? Because they're secured, because they're able to get something from you if you don't pay back. With unsecured, they don't have that protection. They don't have that security. And so those APRs are usually going to be higher in those loans. So definitely take that into consideration when it comes to getting a loan. All right. So what is the top three things? Here we go. What is the purpose of the loan? Why are you getting the loan to begin with? Is it something you absolutely need? Is it just something you want? Is it something that can wait until you can save enough cash for it? That's something you need to ask yourself. I'm not going to tell you what to do with your money. I'm just basing stuff off experience over here on this podcast, but take that into consideration. Can this really just wait another month, another year? Let me go and save my bread. That way I don't have to pay extra to somebody else for some I could just pay for in full myself, right? So think about that. As you start getting more advanced into your uh, journey of financial literacy and going into your own thing and building up wealth, then you could talk about, okay, my money's better spent over here in this vehicle making me money than compared to putting all this money into a lump sum, as a car or as a house. And so it makes more sense because my money's going to be making a lot more over here compared to this little loan. And so I don't want to let that go over y'all's head. I don't want to, get too deep into that because that's a whole nother conversation. But basically the point of me saying that is there's levels to it. There's reasons for taking out loans for different people depending on their situation. So definitely take your situation. Uh, definitely think about your consideration. Definitely think about your situation. There we go. That's what I'm trying to say. What's the APR, right? The annual percentage rate. So what is the cost every year for you to have this loan, right? And so you got to think about that. Is it a fixed APR or is it a variable? A fixed is, hey, this is what your APR is. It's not going to change. Variable is, hey, this is what your APR is right now. But 2, 3 years from now, it might jump up 10% or it might jump up a crazy amount. And there's nothing you can do about it. And so they try to reel you in by saying low, by giving you this low APR from the jump. But at the end of the day, they can do whatever, right? And raise it up however much they want to. So definitely take that into consideration as far as fixed versus variable APR. And then last but not least, what are the penalties at play when it comes to this loan? Can you pay it off early without getting a penalty? Can you defer it if you need to because you can't make a payment? Like, think about all the fees that are attached to this loan and see if it makes sense for you, right? And so that's what I have for this episode. I'm gonna stop it here, start the next one. That way we have another episode for y'all on paying off the debt, right? But definitely take these three into consideration before you get into any type of loan. What's the loan for? Do I really need it? What's the APR attached to it, right? Can I get a lower APR somewhere else? Shop around, shop different banks, right? And then third, what are the penalties attached to having this loan? So I hope y'all got some value from this podcast. Let me know if you have any questions down in the comments, and I'll be sure to answer them. Um, Stay tuned. A lot more value, a lot more information coming very soon. So with that, y'all take it easy. Peace.